ABC of investments. Nursery rhymes make learning fun and easy. Why not learn investments like how we learn alphabets? It's easy. All you need is A. Attention to the subject matter. B. Belief in your grasping power. And C. Curiosity to know more. Here we go. A for alpha. Performance measure that refers to very high returns earned on any investments made in a stock over and above the benchmark return. B for brokerage. An individual or a firm charging a nominal fee to the investor for buying or selling stocks in the stock exchange. C for capital gain or loss. Profit earned over and above the price at which the stock was bought is known as capital gain. Similarly, if the stock is sold below the buying price, the difference is called capital loss. D for Demat. A kind of bank locker where you store your shares after buying in an electronic format. E for equity. Total number of shares held by an individual in a company. F for fiscal deficit. Difference between the total revenue and total expenditure of a government in a financial year. G for gross domestic product. Monetary value of all finished goods and services produced within a country's border in a specific time period. H for hedging. A financial instrument like derivatives, bond, gold, etc., which helps investors to safeguard their overall portfolio against market conditions. I for IPO. Initial public offering, by virtue of which a company offers its shares to investors for the first time on a public exchange like NSE, BSE. J for junk bond. High-risk financial instrument which might default but offers very high returns by investing a low amount. K for KYC. Short for Know Your Customer, where an individual provides their necessary documents like Aadhaar card, PAN card, etc. to prove their identity. L for liquidity. Assets which can be easily exchanged in a market for cash. M for maturity. The day on which a particular financial instrument like bonds, fixed deposits, life insurance becomes due for payment with predetermined returns. N for NPA. Short for non-performing asset, when an individual or company is unable to repay the loan taken from any financial institution. O for overdraft. An overdraft lets you borrow money through your current account by taking more money than you have in the account. P for portfolio. Overall assets held by an individual which may comprise of stock, real estate, gold, bonds and other financial instruments. Q for quarterly earnings. A quarterly report shared by public listed companies to inform the shareholders of their financial performance every 3 months. R for revenue. Total amount earned by a company by selling their services or products by their primary operations. S for savings. Portion of earned money not spent which is set aside for future expenditure. T for trading. The transfer of a stock or security from a seller to a buyer. U for underpricing. When a company issues their shares at a price to an individual which is less than the market value. V for valuation. The monetary worth of any physical product, asset or service which is estimated by a valuer. W for working capital. Difference between current assets and current liabilities. It is the money used by companies to cover day-to-day expenses. X for magnitude of growth. 2x is equal to 2 times growth. 3x is equal to 3 times growth. 4x is equal to 4 times growth. Y for yield. Income returned on an investment such as interest received from holding a financial instrument. Z for zero balance savings account. A savings account which doesn't mandate you to maintain a minimum balance. Investment in securities markets are subject to market risks. Read all related documents carefully before investing.